Hey everyone. One of the questions that I get quite a bit in terms of Unit 2, Subunit 1, VAT Basics is that of the accounting basis. Why do we need the accounting basis? And then how does it practically work or influence our calculation? So if you refer back to your notes, preferably your own, but if you use the lecture notes, and you remember the slide where I compared invoice versus payments, I just quickly want us to run through and recap, and then I'm going to have a look at an example. So remember that invoice basis is your default basis. In other words, we will generally register somebody on invoice basis unless they apply specifically to be on the payments basis, or if they are voluntarily registering for VAT, but the value of their taxable supplies hasn't exceeded 50,000 Rand yet. So for invoice basis, our general rule is that we work on the earlier of invoice issued or payment received. The exception to this is the supply of fixed property, which we will be having a look at later. Payments basis, very simple, payment triggers VAT. However, there's an exception, and if the consideration of your supply, and when I say supply there, I'm talking about a single supply, so a single transaction, is 100,000 Rand or more, it moves you over for that specific transaction to the invoice basis. Now remember, the reason we said why we need the accounting basis is because it's going to tell us in terms of timing, when do we account for output VAT payable or refundable. So let's have a look at an example. We've got a Mr. X who's a category A vendor. In other words, his tax period is 2 months and it ends on our odd numbered months. In other words, it's going to end on 31 March, 31 May, 31 July, 31 September, 31 November, and then in the next year, 31 January, right? So you'll see I've put out there's going to be 1, 2, 3, 4, 5, 6 tax periods for this specific vendor. They tell us that he sells sweets for a consideration of 57,500 and that the date of the invoice of the supply is 15 May 2019 and he receives payment of the consideration on the 20th of June 2019. And the question is, if he's registered on the invoice basis, during which tax period do we account for the output VAT versus how will we account for the output VAT if he's registered on the payments basis? So let's have a look if he's registered on the invoice basis. Now, if a vendor is registered on the invoice basis, how they would account for VAT is on the earlier of the date of invoice, which is on the 15th of May, so that's round about there, or the date of actual payment, which is the date that he received the payment, which is round about there, the 20th of June. And the question is, right, in which accounting period or tax period should he now be accounting for the output VAT? And ladies and gentlemen, which one of these two is the earlier? It's that 15 May 2019, and that 15 May falls within the tax period starting on the 1st of February and ending on the 31st of March. So if he's registered on the invoice basis, we are not going to account for the VAT only once the payment is received. We are going to account for it on the earlier of payment or invoice. Our payment is earlier, so SARS will be getting their output VAT for the 2-month tax period ended 31 May, and they don't have to wait until June. Of course, if a vendor is registered on the payments basis, we don't look at the earlier of, except where for a single transaction our consideration exceeds 100,000 Rand. If they're registered on the payments basis, we only account for output VAT on the date of payment, and in this case it will be the 20th of July. In other words, for a vendor registered on the payments basis in this type of transaction, we will account for the output VAT in the 2-month period ended 31 July 2019 because we only look at the date of payment.